Infrastructure is critical to achieving energy transition, as the ultimate result will be greater electrification of our economies and a massive build-out of green energy production. This will require substantial investment by electric utilities worldwide to upgrade distribution networks, transmission networks, storage, carbon capture, and electricity generation, just to name some examples. Tax credits called the ITC and PTC, Investment Tax Credit and Production Tax Credit, are very supportive to the investments being made in the renewable energy space. Similarly, the $3 per kilogram green hydrogen subsidy is potentially substantial enough to help kickstart meaningful growth in that industry. It's great to see the US government helping to keep the momentum going, but much more support is needed globally. We define our global listed infrastructure investable universe quite purely. By that, I mean we look to include those companies that own or operate the underlying infrastructure, but not those companies that are infrastructure related. We also look to exclude companies that have excessive commodity exposure. So to use examples, we would invest in airports, but not airlines. Or we would invest in toll roads, but not asphalt producers. We define the universe so purely because you then end up with a group of companies that is truly different than a broad global equity universe. Our companies tend to have lower economic cyclicality, a favorable upside-downside capture ratio, higher yields, and often inflation linkage. It is these four attributes that tend to attract investors to global listed infrastructure.